Hi, this is Charles Kelly, going out on YouTube, going out on Facebook Live. Well, today I wanted to talk about these extraordinary events that are happening in the UK. In case you thought things couldn't get any more crazy, well, they just have. Liz Truss, Prime Minister for just 38 days, is gone. She's resigned. She stepped down outside number 10 Downing Street this afternoon, stood on the just in the street there on a podium and said, you know, she cannot continue with the mandate on which she was elected, therefore she has to resign. Now, this comes after a tumultuous couple of weeks where her Chancellor resigned because the markets rejected his mini budget. Then we had yesterday the Home Secretary stepped down. She had a massive argument apparently over immigration policy with Liz Truss. And now then we had this vote of vote of confidence last night on fracking. And you know, her own MPs have been calling her for to go, and I think she's sort of bowed to the inevitable now. So again, it's the parliamentary MPs that have got rid of their own prime minister, just like they got rid of Boris. So in a way, they deserve what they get now, which is chaos, and which could be a Labour government if this government falls. But what she said is, no, there won't be a general election. There will be an internal election for a new leader, and that will take a week. In fact, it's going to be Friday, the 28th of October, they'll have a new leader. This, of course, is in contrast to that summer leadership election we had, where lots of candidates were stepping up and trying to become leader, and it ended up with two, and then it went to the vote of the members, not the MPs, the parliamentary MPs. It went to the members of the Conservative Party. So I think this time they're going to do an online vote for members to vote for a new leader out of two candidates, and there could even be one, in fact. But two candidates are expected to come up. Could be Rishi Sunak again. He was the market's choice, and it looks like the market will get the leader they want. They didn't like Liz Truss, her growth policy and low taxes, so it looks like they might get a Rishi Sunak type of leader that sides with them. They've certainly got Jeremy Hunt as the Chancellor of the Exchequer, because he's sort of said he's abandoned all of the Liz Truss plans. So the markets might get what they want, and that will be, you know, austerity, higher taxes, pain for people, but good for the markets. So let's see what happens. Now, a lot of migrant workers I talk to don't really care about this. They say, well, so what? A new prime minister, what does it mean to me? Well, in a way, they're right. They're getting on with their own work, and that's great. But I think for a lot of people, they're going to be thinking about their mortgages, which have hit literally a 14-year high. Fixed rates, 2 and 5-year fixed deals have hit 6.65 and 6.51, which is, you know, 3 times more, triple the previous sort of rates that you could get, around 2%, 300% higher. So yeah, it sounds like, oh, it's 4% more, but that's 300% higher than they were paying. And did you know, I mean, a lot of people say, oh, don't worry, everyone's on a fixed rate. Not true. Yeah, not everyone is on a fixed rate. A lot of people are on a fixed rate. I think something like 3/4 of borrowers are on a fixed rate, but there's a lot of other borrowers that either are on a fixed rate that is expiring or didn't have one. They might have had a discount rate. They may have not bothered with a fixed rate. But it says here that, let's just share a screen here and I'll show you why I'm concerned about this. This is the screen of Liz Truss resigning there on the streets there. But I want to show you another screen about mortgages, because I think for a lot of people, they're not going to be that worried about who the leader is. They're more worried about their own neck, which is the mortgages. 14-year high there. There's the rates, 6.65, 6.651. But I want to go down a bit and just show you what's happening with the stability aspect of it. And that is that 100,000 people every month will be facing the end of a fixed rate deal. Let me just repeat that. Every month, 100,000 people will come to the end of a fixed rate deal, and then they're going to be hit with much bigger rates, because some people were fixed at less than 2%. And then they're going to be facing, you know, possibly a 300 or 400% rise in their mortgage, if they can even get another mortgage deal. I'm sure the lender will say, well, by default, you will go onto the variable rate, but Can they get another fixed rate? Because has their income changed? Has their income gone up enough to justify lending them a mortgage of 6.65, which could be in some cases up to £1,000 per month more than they were paying originally. So the lender's got to underwrite that. The lender's got to say, can this person afford this mortgage of £1,000 a month? And if not, well, what are we going to do about it? Now, if they default onto the variable rate, there's not much the lender can do about that because that's in their mortgage terms. You know, at the end of this fixed rate, you will automatically go to a variable rate. And in most cases, that would be double or treble what they were paying before. But a lot of people are going to be facing this. So the lender won't underwrite that. But if they want to then remortgage or maybe go for a new fixed rate deal, the lender might be looking to underwrite this, even though it could end up with lower payments. That's how some of these rules, crazy rules, work, in my opinion. But that's going to be a problem for a lot of people in the coming months. How is that going to affect people? Well, obviously, it's going to really hit people in the pocket. You know, obviously, there are people out there that don't have mortgages. Let's face it, there are 35% of homes are owned without mortgages, but they tend to be the bigger homes, the more expensive homes that have been perhaps bought by baby boomers when they were cheap, and now they've paid off their mortgages. But for a lot of young people with families, they've got huge mortgages, some of these people, because I remember saying this a couple of years ago, that first-time buyers are buying properties at £600,000-700,000. Yeah, they might have a nice little deposit from the bank of mum and dad, maybe through an equity release scheme. They've released the money and given it to them for their deposit, but they've still got mortgages of £300,000-500,000. First-time buyers. So when they get a huge rise, they are really going to feel it. I mean, imagine if you've got a mortgage of £500,000. Well, every 1% rise on that is £5,000 a year. So a 4% rise on that could be £20,000 a year extra on a £500,000 mortgage, and that's huge. You know, I know we've had all this cheap borrowing. We've had years and years of cheap borrowing. It's been fantastic. You know, we can buy big houses, we can buy things, we can pull out money from our homes and buy nice cars and holiday homes and that sort of thing. But that era is coming to an end. The end of this low interest rate mortgages and cheap credit, cheap money. It might come back in many decades' time, but for the moment, it's gone because of inflation. The Bank of England said again that they will raise interest rates next month by more than expected. And this is to fight inflation. Food prices are going up by the highest rate for 42 years. Food prices going up by highest rate for 42 years. So they've got to fight inflation. And you know, the Federal Express, the Federal Reserve are putting up rates faster than the UK, and this is why the pound was going down at one time. And you know, we saw this is one of the problems that Liz Truss faced, was this pound going down, the pound suffering because of interest rates were going up faster in America. That strengthened the dollar. The pound ended up weak and exposed. So that's made things difficult for everybody here. And there's no doubt that the mini budget that Kwasi Kwarteng had did affect the market. It did spook the markets, if you like, and that's why Jeremy Hunt's come in. But what about Jeremy Hunt's plans? What about I mean, he's ripped up Kwasi Kwarteng's plans. If we get a new leader, say someone that doesn't agree with Jeremy Hunt, they might get rid of Jeremy Hunt and tear up his plans. Who knows what's going to happen? The markets have come out in favour of getting rid of Liz Truss. You can see there that the FTSE up slightly, not much there. We've got the pound has risen slightly down there, you know, by 1%. So it's now let me see, 1.13. So it's gone up 13% in the last few weeks after that massive drop. So fair play to all you currency traders. You probably made a lot of money in the last few weeks, but it's basically gambling. It's not for me. It's not the kind of thing I want to do. If we look over in America, the Dow Jones and the Nasdaq, they're up. I don't know why, because these stock markets are really overpriced. You know, let's face it, the markets are completely and utterly overpriced by any standards, by the PE ratios, by the Schiller ratios. They are crazily priced, as are properties. So, and yet they still seem to go up. I think we're due for a big correction, if not a crash in the stock markets. That's my prediction, maybe by the end of this year, maybe even as soon as the end of this month or next month. And I was listening to a journalist from Australia earlier, and she said that Australia's had this similar thing of cheap money, giving mortgages away like lollipops, as she put it. And now the chickens are coming home to roost, as the government have been putting up, not the government, but the Reserve Bank have been putting up interest rates. And now Australians are suffering the same fate that the people in the UK are suffering. America hasn't got so much problem because they tend to have long-term 30-year fixed rates, which is great. That's a fairer system. Here, the brokers give us 2 and 5 year fixed rates. Then they need to be updated. Then the broker earns a bit more money, maybe remortgage. Oh, I can do a cheaper deal over here. Let's move your money over here. Let's move your mortgage over here. And I get a nice little £1,000 commission. Great. Good. I was in that business. I've been there, you know, I was in that business, and it is great. But look, what does this all mean to you? Well, as I was saying earlier, for a lot of people out there working, you know, either in the city or driving their white van or doing some building work or just doing any work, they're not even thinking about what's going on with Liz Truss. But I talked to someone recently, she didn't even know who the new Prime Minister was when Boris Johnson had gone, let alone now. She's probably thinking, oh, wasn't she the Prime Minister just a couple of weeks ago? Oh, what's happening now then? You know, but really, you've got to just get on with your life. You know, what can you do to change the economy? Nothing. But what can you do to change your economy? Everything. What can you do to change your economic policy, your Uconomy? Everything. What can you do to change the way you handle money and deal with money and accumulate money and manage your money? Everything. That's what you can do. And that's why I've launched financial education for financial freedom, with lots of free training, which you can catch there on the link. If you click on the link below, you can see a lot of free training there. So do click on that. Whether you're looking at this on Facebook Live or YouTube, click on the link below and go to the free training that you can see to get control of your finances in the next 28 days. Who knows, by 28 days, we might have had another 1 or 2 prime ministers. And in that time, you could get control of your finances. And you need to do this quick because the cost of living, you know, food prices rise at the fastest rate for 42 years is serious because everybody needs to eat, right? And you're out there every day buying food and you think, oh, that's a bit, oh, I thought that used to be a tenner. Now this same stuff is £11. You know, oh, what's happening here? Well, yeah, it's going up. Your money has been depleted by inflation. Any money you've got sitting in the bank earning almost zero is losing buying power effectively of 10% a year. So, you know, £1,000 effectively is worth 900 next year. At 10,000 is worth, you know, £9,000 next year because it's losing money at a serious kind of rate, you know. So do look at that. And if you've got £100,000 in the bank, your buying power is going down by £10,000 a year. So it's worth 90,000 next year. Think about that. So there's never been a better time to learn about money. Don't do anything before you get financially educated. Don't buy any properties. Come to me first, get financially educated. And I receive a lot of inquiries from people saying, can I buy properties now or wait till the new year? Get financially educated. That's what you've got to do. So click on that link there down in the description or up in the description or sideways or whatever. Click on that link and I'll see you there for the free training to help you get through this tumultuous time, this serious time in our history, these unprecedented times in our history. Because whoever is in government, you know, whoever's voted in, you know, the government will still win, as they say, but whoever's in government, you've got to run your economy and your Uconomy, right? Your Uconomy. You've got to run it. You've got to learn how to get control of your money. It's not taught in school, not taught in universities. So you've got to learn it through people like me who will teach you in 28 days how to get control of your finances. So do check out that link.